A very good evening to all the viewers. We are back with yet another interesting episode of the Fisdom Wellcast. And right here in this Wellcast, we have an extremely interesting guest with us. It is Dhaval Shah, a fund manager at Aditya Birla Sun Life Mutual Fund. He has an experience of over 1.5 decades with almost over half a decade spent at Aditya Birla Sun Life Mutual Fund itself. He specializes in managing a variety of funds. So, Dhaval, a very warm welcome to the Fisdom Wellcast. It's a pleasure having you on the show.
Thank you, Nirav, and it's a pleasure to be here. And I'm more than happy to have a conversation with you and your guests.
Right. So, without any further ado, let's jump right into the conversation. And I'll ask the most important question that everyone keeps having on the top of their mind. Market क्या बोलता है? People are worried. There are two hopes. एक लोगों को चाहिए कि हमारा सेंसेक्स का चार्ट स्टीपन होता जाए और दूसरा कोविड का ग्राफ फ्लैटन होता जाए. These two hopes are on the minds of all our investors every waking moment. So with so many different things happening, with the resurgence of the virus, with the recent uptick, and now the small little pain that the markets are taking because of the resurgence and other factors. How do you think the economy at large is shaping up, and how would you translate those factors into how do you think the capital markets will shape up going ahead?
Sure. So, Nirav, it's a most pertinent question that every investor has in their mind today. We are in a volatile time frame, and that is where people are concerned that where do we go from here. Our two bit on the overall market is this, that what we're experiencing today, that is COVID wave 2. ये हमने देखा है that if I were to look at from a other country perspective, specifically developed markets, they have experienced it a couple of months earlier. So say, for example, UK had its peak in December, and today the cases are 90% below from the peak that we're trying to look at. And experiences are similar what was there even in wave 1, where we had typically had a peak a couple of months after what happened in developed markets. So that is where there is a learning that is there from various other countries of how this behaves, and we will be no different in that context. So generally, हमने देखा है that जब भी there is an onset of virus in a particular city or in a particular state, it typically takes 72 to 75 days to have that overall peak and come down in the overall graph that we are trying to look at. So अगर हम बॉम्बे की बात करें, मुंबई की बात करें, then we have already seen that peak happening possibly in 4th of April. We were at around 11,000 cases daily. We are somewhere at around 7,500 today. And we will go down incrementally is what we would think. Maharashtra is somewhere near the peak, and you have various other states like Gujarat, Rajasthan, Delhi, Karnataka having their own waves that we're trying to look at. But in essence, everybody will have this 2.5 month kind of a cycle, and uske baad mein cheeze will become much more normalized in terms of what you are trying to look from a lockdown perspective that is there. That is observation number 1. Observation number 2 is that while many people are really looking at that what will happen to the markets, they were clearly surprised. 1 year back, जब pandemic चालू हुआ था, तभी if somebody would have said that we are entering a pandemic, what should be the market reaction be, and आपको क्या लगता है 1 साल बाद market का क्या होगा? Nobody would have told you that we will be 20% up in a 1 year time frame after the whole episode has actually transpired for the last 1 year. Now, why has that happened? आप classically देखोगे ना, so there is and when many people understand this, but it is very important to emphasize that there is a big liquidity push that happened. So when the first wave happened, it was completely an unknown, right? And because it was an unknown, we had a vertical fall. And जब भी there was a vertical fall, there was a reaction by various governments across the world in terms of a big liquidity push that happened across the world that we are trying to look at, right? And in that environment, the quantum of liquidity that has got pushed this year has been so much high that it is not comparable even to the global financial crisis. And just an example, अगर मैं सबसे बड़ी इकोनॉमी की बात करूं जो यूएस है, राइट, वहां का जो मनी सप्लाई या लिक्विडिटी इंक्रीज हुई है प्लस द फिस्कल डेफिसिट दैट वी आर ट्राइंग टू लुक एट ऑन अ YOY बेसिस इज एक्चुअली, अगर मैं उसको 2008 के ग्लोबल फाइनेंशियल क्राइसिस से कंपेयर करूं तो वो 3 गुना ज्यादा बड़ी है. And if I were to put a 100-year chart, and मैं पिछले 100 साल के अंदर देखूं that कभी इतनी बड़ी liquidity आई थी, on an overall basis, it was way back in 1950s, जहां पर World War II जैसा event हुआ था, and there was that kind of a liquidity push that happened in the overall economy, And जब भी वो event खत्म हो गया था, then we had a 16-year bull run ahead of us from 1950 to 1966. And of course, that bull run had three corrections of 15 to 20%, but that was the quantum of bull run that we had seen because of the big liquidity push. हमें देखना है that after COVID subsides, what would be the reaction that our markets will have. And third and the most important point, which I would want everybody to consider is that everybody is hooked on to vaccination, because we have seen that vaccination helps you to control this to a larger degree, which is there. But science is also progressing towards cure. And there are various companies which are working towards the cure that we are trying to look at. Few early ones which we can clearly see have gained some kind of a advantage is there is a company which is known as Merck. They have a molecule known as molnupiravir, right? And it is seen that they tested it on ferrets. Ferrets is an animal which has an upper respiratory tract system which is same as human beings. And they saw that after all these ferrets were infected by COVID-19, if they were given molnupiravir, a large section of them got all right within the next 7 days that you're trying to look at, right? Similarly, just 3 days back, you had a company in UK which is known as Sanotize, which came up with a nasal spray. They tested on 7,000 patients, and there was a 99% recovery in 72 hours. 3 दिन में 99% kind of a recovery that we're trying to look at. So I am fairly hopeful, and even if I look at Dr. Yusuf Hamid's interview 15 days back in India, they called out that they are also testing 300 kgs of molnupiravir which they have received from Merck. And so I'm fairly hopeful that in the next 8 to 10 months we will have a cure for this disease. And that is where like you have various other diseases. So COVID is not going away. COVID will be here with us. But like you don't get very perturbed if you get malaria, because if you go to the doctor, he will give you Lariago and you'll be okay in 5 days. Similarly, you will have some or the other medicine which will take care of what will happen if you get COVID, and that is what we are expecting will happen in the next 8 to 10 months. So considering all of that, I think that we are in a shape and a position where there will be some volatility for the next 1 or 2 months because of high rises in cases. Then possibly it will subside, and there is a definite cure that we're trying to look at 8 to 10 months out. Our government has been fairly supportive, in terms of trying to, be not very constrained on the fiscal side. उन्होंने अपना budget बढ़ा दिया है. They are ready to spend, in various areas which can increase the investment cycle of the economy. And they have come out with schemes like PLI, production linked incentive, जो काफी help कर रहा है for the overall corporate sector to actually increase the output on an overall basis that we are trying to look at. So, if you were to ask me 3 to 5 year view, I'm fairly optimistic on the overall markets from a 3 to 5 year perspective.
Right. I absolutely love the way you blended your understanding of capital markets with your extreme specialization in pharma and healthcare. I do not remember the medicine names that you said, but I am completely convinced by the story. And one very important fact that you mentioned, that all of us are raving about the vaccine and the vaccine progress, but there is an even better news in the making, a cure in the making. And a combination of these three. I don't know if it's too early to comment on the situation of herd immunity, but if we progress towards herd immunity, plus we have an effective and efficient vaccine rollout implementation, plus we have a cure in place, I think everyone's going to get back to business as usual. There's nothing that's going to hold the economy back, and the Indian economy especially is slated to recover the fastest, right?
Yes.
Especially among the emerging equities. That's what all global analysts are also banking on. So at this juncture, given the way the markets are shaping, we also have very large number of investors who are entering capital markets for the first time. अगर आप देखोगे तो पिछले कुछ महीनों में ही record number of demat accounts भी खुल चुके हैं. The number of mutual fund investors are also increasing at the same time. People are now getting interested in the markets, but people are also lost. And they do not understand how should they approach. The very first point to enter a market is buy something that your friend says. It could be a mutual fund or a stock. Buy something that your friend says. But eventually they realize that they have to start building their own portfolio, because personal finance is called personal for a reason, right? It has to be personalized. So we also know that Aditya Birla Sun Life Mutual Fund, as a fund house, as an AMC, You guys are very focused on the principles of allocation, especially asset allocation, and you guys are also extremely good at it, which we can see from the various hybrid and dynamic asset funds that you guys manage. So, what are your thoughts on how should one approach asset allocation within their personal portfolios?
Yeah, so first thing on the overall asset allocation side is that while many people will give you different formulas to approach what is the right asset allocation for our overall portfolio, frankly, that is one area that you will require serious help, and you should be looking at that. How can I make a confident portfolio which will serve well for me over a multi-year perspective while I'm earning, and eventually, when I retire and the funds that I require for it. And it completely depends on your overall risk taking ability rather than anything else. I know there are many people who will tell you that it is age based, that it is based on your income levels that you're trying to look at. But that is true, and of course you should consider both these parameters as much, but also the fact that आप कितना risk लेना चाहते हो, and how much comfortable are you with volatility is what will define in terms of a right asset allocation which is there for you. And it is very much possible that you might be in your 50s and 60s, and at the same time you are a good risk taker with a lot of wealth. Then you can actually be having a higher allocation towards equity even at that age that you're trying to look at, purely because of the fact that you have an ability to actually compound and compound wealth clearly, and you also have margin of safety with some quantum of wealth there with you. And at the same time, it is vice versa, that you might be very young but you are very risk averse, and then accordingly you have to build an overall portfolio. So overall asset allocation is something that is very dependent on your risk taking abilities, along with the various other parameters that you're trying to look at. What I will tell you is, you have to approach various asset classes from a perspective of what kind of a time frame you're trying to look at, and what is the time you're willing to spend in terms of investing in that asset class. And whenever you're approaching equities, ideal time frame is 5+ years that you keep on investing, or holding whatever you're invested. You invariably find the power of compounding getting onto you, and you getting benefited because of that. And that is something that you have to keep in mind, and accordingly frame the overall asset allocation that you're trying to look at from an overall perspective from where we are today.
Right, right. So when we talk about asset allocation, it is almost imperative that we cannot complete the discussion without talking about diversification, right? So let's jump to the other side of the coin, which is diversification. Quite often, the only thing that most of us lay investors, first-time investors, the only thing we can make of diversification is बहुत ज़्यादा खरीदो, अलग-अलग खरीदो, ज़्यादा खरीदो. That is what we understand of diversification, right? We have seen a number of portfolio where in a quest for diversification, people have bought at least 50, 60 mutual funds, okay, only to finally realize that maybe they're not as truly diversified. So what are your comments on how should one approach diversification, and what is the essence of true diversification?
Yeah, Nirav. So, one of the important essence of diversification is to have, asset classes. जहाँ पर, अगर आपने debt and equity खरीदा, then there is the big hope that, whenever equities are going down, there will be stability of debt which is there. So, you have a diversified portfolio in asset classes that you're trying to look at. Similarly, within a single asset class, say, for example, you're buying equities, right? Many people tend to add more and more stocks in the hope that they are diversifying. बट क्या हो जाता है, अगर आप सेम सेक्टर के अगर स्टॉक्स खरीदते हो, देन इनफैक्ट यू आर एडिंग टू द ओवरऑल रिस्क प्रोफाइल रादर देन यू आर ट्राइंग टू डाइवर्सिफाई. एंड दैट इज वन extreme area where you should always consider that आपका कितना overall diversification across various sectors है, या आपने म्यूचुअल फंड खरीदा है, तो then what is the number of mutual funds across various categories that you are trying to look at. The other extreme is when you are over diversified, and as per my understanding over the last 1.5 decades, I find in India a lot of investors on this extreme, जहां पर I find many investors जिनके पास 10-10 म्यूचुअल फंड स्कीम्स होती है, एक म्यूचुअल फंड स्कीम के अंदर 50 स्टॉक होता है, and that is where by buying 10 schemes plus, आपने virtually you got your overall assets into the overall market only, rather than trying to play a part of the market that you are trying to look at. And that is where I must bring to your attention that what SEBI has done in terms of trying to simplify structures, at least on the equity mutual fund side and as well as on the debt mutual fund side, that आपको कौन से scheme में क्या मिलेगा. जैसे for example, when I look at a risk return perspective, at the bottom, is a product from any AMC that you're trying to look at, is a product which is known as a large cap scheme, जहां पर you have only 10 to 20% into mid caps. Majority of your paisa is actually into well established large cap companies, and to that extent there is no big disappointment because they are always well tracked in that sense that you're trying to look at. Up the risk curve, there is something called as the Flexi Cap Scheme, जहां पर typically mid and small cap allocation 20 से 35% होता है. Technically, Flexi Caps are allowed to go much higher, but the fact that the benchmark उनका जो होता है वहां पर 20 to 22% mid cap होता है, इसीलिए वो 20 से 35% mid cap रखते हैं. Then up the risk curve is large and mid cap, which is 35 to 50%. And then there is multi-cap. Incidentally, we are just launching a multi-cap NFO ourselves at Birla, जहां पर minimum आपका 50% small and mid cap में रहता है, which is for a very aggressive investor who wants to participate in the overall growth story that you're trying to look at. And then there is mid cap and small cap in the overall schemes that you're trying to look at. So ये सारे baskets है, large cap से लेके flexi cap, large and mid cap, multi cap and mid and small caps. तो आपको अकॉर्डिंगली देखना चाहिए आपका एसेट एलोकेशन आप अक्रॉस स्कीम्स कैसे कर रहे हो, आपने कितना परसेंटेज ऑफ द पोर्टफोलियो अकॉर्डिंगली कौन से कैटेगरी में लगाया हुआ है. एंड आई थिंक 1 or 2 schemes in each category is more than enough to have an overall asset allocation right from an perspective that you're trying to build a portfolio that you're trying to look at. If you can study the portfolio as well as the overall track record of the fund manager, the consistency, the volatility of the portfolio, and accordingly आप decide कर सकते हो कि आपको कौन सी schemes select करनी है उसके अंदर से from an investment perspective.
Right, right. So we'll briefly touch upon the topic of asset allocation once again. So you manage the hybrid fund, right, at Aditya Birla. So there is this question that has constantly nagged us. Okay, it has been brought up by several investors. Is investing into funds belonging to categories like hybrid funds and asset allocator funds a good enough proxy for asset allocation? Does it relieve the investor of the burden to decide an asset allocation framework? They simply invest into hybrid or asset allocator funds. So what is the true utility of these fund categories? Where should an investor place it? Because at the same time, we see investors who invest in a variety of funds and also into hybrid funds. So then, or an asset allocator fund, then the point is somewhere lost, right? You might as well have a good equity and a good debt fund. So what's the point about such categories, and how should investors look at it?
Sure. So, there are two kinds of investors. One which is trying to explore the market by themselves and trying to say that, look, I want an asset allocation fund from the asset manager, and that is where we have direct solutions. Say, for example, when we are trying to look at hybrid funds from our end, right? There are 3 categories of hybrid funds that are there. One, is known as an hybrid equity fund, where we have an asset allocation of 75 to 80% into equities and balances into debt, right? Then we have an equity savings fund, where typically the equity component is around 40 to 45%, right? And the balance is into debt and arbitrage. And third one is regular savings, where the equity component is 25%. So from the most aggressive investor to the most conservative investor, you can vary your equity portfolio depending on right from 75, 80% to 25% by trying to invest in any of these funds. And that will take care of your overall asset allocation from a perspective of directly investing into it. But there is also an option that you can work along with an advisor and frame this component of overall asset allocation based on your comfort. And then you can decide that how much I want to invest in a pure equity fund, जो शायद फ्लेक्सी कैप हो सकता है या मल्टी कैप हो सकता है या लार्ज कैप हो सकता है, डिपेंडिंग ऑन what you want to achieve there. And मेरे को थोड़ा aggressive जाना है, then I can look at a mid cap fund that we're trying to look at. So both options are available, so that depending on what is the investor's comfort. If he wants a direct asset allocation solution, then आप ये इसी 3 में से कोई भी एक hybrid fund select कर दीजिए. It will automatically keep on doing that asset allocation year after year for you, on a consistent basis. or else you have a overall decision that I will decide my asset allocation individually, and then select the funds that I want to invest in.
Right, right. I feel that's a fair approach. That's a fair framework for investors to follow. While talking about the different types of equity funds, you mentioned two categories: multi-cap and flexi cap, just back to back. And this is quite a point of confusion for many because like you said, you are also launching a multi-cap fund, but we also know that you have a flexi cap fund. We know there's a slight technical difference between the two, but largely, do you think it will serve the same purpose or objective, or there is distinction? Maybe not at an industry level, but what's the distinction between an Aditya Birla flexicap and an Aditya Birla multicap?
Sure. So there are two important distinctions when you look at Aditya Birla FlexiCap versus Aditya Birla Multicap. First one, I told you that FlexiCap typically has an asset allocation towards small and mid cap, which is around 20 to 35%, right?
Hmm.
Which is representative of where the broader market is, plus or minus 10% in terms of the mid cap allocation that we're trying to look at. Whereas a multi-cap fund, which we are launching today, right, and which is actually getting launched as we speak from 19th of this month to 3rd of May is the NFO, which is open. So you can subscribe to that till 3rd of May. Is a product where we are looking at that minimum there will be 50% small and mid cap, and in the current environment where I told you that we're extremely positive on the market from a 3 to 5 year perspective, it will have a mid cap allocation, and small and mid cap allocation of around 60 to 65%. So that is for an aggressive investor, जहां पर आपको बहुत almost 2x the overall mid cap allocation मिल रहा है versus what you're trying to get in a flexi cap, and that is a major difference in terms of how you're trying to map the overall product that you're trying to look at. Second one is a fairly nuanced one where Aditya Birla Sun Life Flexi Cap Fund is managed by my colleague Anil Shah, who is a value-oriented fund manager. And you pick up his portfolio today, or possibly 3 years back, 5 years back, or 7 years back, he's always been a value-oriented fund manager, which has worked wonders for him. If you look at the performance for 3 year, 5 year, 7 year period, it has delivered great returns. Whereas what we are trying to approach for a multi-cap perspective is a growth-oriented portfolio, where we find a lot of opportunities in the current market to do growth investing, and that is what is a mandate that we will follow in the overall multi-cap fund, and something that we think will be able to add more value over the next 5 year perspective that we're trying to look at. So those are the two important differences between flexi cap and multi-cap.
Great. So, I'm once again touching back to our conversation on diversification. There is yet another question that keeps troubling our investors, and in turn, our investors keep asking us about it. Is on the value of diversifying into international funds. Okay, so now this question is slightly nuanced. People feel that they can invest in domestic funds, and whenever they talk about international funds, they will pick almost any international fund, right? So, does it really serve the purpose of diversification if you, invest in a variety of domestic funds and then invest everything into a single geography of, in a single global geography, or, someone should take a much more nuanced approach towards having global diversification? How should one approach diversification by utilizing international funds?
Sure. The first thing is that there is always a place to have some portion of international equities into your overall portfolio, right? It acts as a very good diversification versus domestic equities that you are trying to look at. In fact, if you had done it in the last 10 years, you would have made much more money, because developed market made a lot of money versus emerging market in the last 10 years for a variety of reasons that we can talk separately if you are interested in, right? But at the same time, it is very important, as you highlighted, that that has to be a truly international fund and not concentrated only in one geography, that is either US or Europe that you're trying to look at, or particularly within that into one sector of that which is doing extremely well today. And you think that you're diversified, because you might be not knowing what are the drivers which are driving that kind of a rally in international markets, and what can actually lead to stop there. So it is much more better if you have a fairly diversified portfolio on the overall international equity side that you're trying to look at. But it is definite addition that you should be looking from an overall diversification perspective, that you have some component of the overall portion into international equities, or have investment into schemes of mutual funds which do international equities also. And that is also an option which will help you to have some kind of an exposure towards international equities.
Right. And so, Dhaval, over the past 16 plus years, you would have met many investors. You have seen various cycles, and people would have, you would have observed various behaviors of investors per se. And in the process, several mistakes that investors repeatedly make. So what are your such observations that you would like to share with our viewers? Like, what are the most common mistakes that investors make, especially in the face of heightened volatility, that you would like to warn or advise our viewers against?
Sure. So, the biggest issue with equity investing is actually that investors are not fairly comfortable with volatility. Whenever markets correct, they don't know whether to buy or sell, right? So at Aditya Birla Sun Life Mutual Fund, we did a very interesting exercise which covered the last I would now say 30 years of investing into equities, and saw that which were the biggest corrections which happened in equity markets, and what should have been the reaction function for anybody who was putting money then into equities, right? And one of the biggest falls that you will also remember, along with the viewers that are there on the show, is was the time when there was global financial crisis in 2008, right? In 2008, Sensex was at 21,000 level in January 2008. By September, it went down to around 8,000, right? And by June 2009, it went back to 21,000 kind of a level that you're trying to look at, right? So from a overall 15-month perspective, it was the biggest ever correction that had happened in the previous 25 years of what we're trying to look at, of more than around 50% kind of a number, and you came back to the same level, right? We did an exercise to understand that which was the best performing stock stroke sector that you should have held in the most volatile time frame that equity investing was, right? And किसने सबसे अच्छा perform किया रहेगा if I would have invested at the peak and when the markets came back to the peak. Would you want to guess the sector? We cannot talk about specific stocks here. Which sector it would have belonged to, which was the best performing sector from 21,000 to 8,000 to 21,000 in the most volatile time frame in equity markets that you're trying to look at? Any guesses that you would want to make, Nirav?
Hang on, let me see if the audience writes anything for a couple of seconds. I'll pick that, or I'll go with. Okay, so let me take a shot. I think it has to be financial services and
No,
FMCG.
financial services was not there at the topmost, or FMCG was not there at the topmost, but a couple of companies out there were there in top 10. The best performing company was from the IT sector. Okay.
Hmm.
And, I'll just give you an example in terms of a market cap. It is not a stock recommendation, but it's very important to understand what I'm trying to say. And that is why I'm quoting you this example. The stock's name was TCS. Okay. But
Hmm.
why am I trying to tell you this? Is that at the peak of the market, it was an 80,000 crore kind of a market cap company, right? In 2008, January. When the markets fell to the bottom, right, in March 2009, the market cap was 50,000 crore, right? And when it came back again to 21,000 level, the market cap was 1,60,000 crore. So in the best performing company, you would have actually doubled your money in the most volatile time frame that you're trying to look at, right? Forget that. We are today in 2021. The market cap is 7 lakh crore, right? So it wouldn't have mattered much if you'd have bought at 80,000 or 50,000 had you held on to your investment for such a long time that you're trying to look at. But I told you there is nothing there in the name. Just expand that list to the top 10 companies, right? And you have the best performing ones in terms of the largest private sector bank that we would have, one of the best FMCG companies, one of the best pharma companies, one of the best retailing companies in terms of gold jewelry that we're trying to look at. And all these are from various different sectors, but they had one thing in common, and that one thing in common was that they were very good in the businesses that they were trying to do. And that is where, despite volatile time frames, each of these companies took advantage of that volatility and came back very well, right? Now you will say this is just one crisis that we're trying to talk about, right? Let's go ahead and look at demonetization, which was another big crisis. You will invariably find that good quality companies came back once again and with flying colors after demonetization crisis ended. Go ahead further and you'll get GST, which was again one more slowdown that we're trying to look at, and you had a similar outcome. And don't go very far, but look at COVID, which was just last 1 year. And you look at your portfolio, and most of the companies, if they are of good quality today, right, while the markets have come back, they will be either be at the same level or at the higher level than what it was before the COVID happened. And mind you, the corollary is also true. The worst performing company, right, at that point in time, eroded not only the market cap when the markets were going down, but they also eroded market cap when the market actually went up. And there are a lot of examples. I cannot name again companies here, right from companies which were there in infra sector to real estate to various other sectors. One of the large telecom players that we're trying to look at then, and you can see for yourself what happened to their market caps. So the corollary is also very important, that if the portfolio has companies which are not of good quality or not of good strength enough, then you will have to worry every day to what is happening to my overall portfolio and what will happen if volatile times come from. So one of the golden rules in equity investing is that always focus on the quality of the holding. As long as you have a good quality portfolio, don't worry about volatile time frames, because if volatile time frame comes in, the companies will take advantage of that and come out with flying colors. And that is what I have learned for all my 16 years that we're trying to look at. The largest private sector bank then told us that we are going into tier 3, tier 4 town more aggressively. We don't care about our cost to income ratios, because when the upturn comes, we'll benefit. The largest retailing company said that I'm buying another 1 lakh square feet of retail area because real estate is never so cheap. And everybody came back in flying colors. This time also it will be no different. You will find all good quality franchises coming back with flying colors and giving you very good returns over the next 5-7 years that you're trying to look at.
Right. So I can't quite recollect. I guess it was said by Voltaire allegedly that history never repeats itself, man always does. So I hope this time at least our viewers do not repeat the mistake that most investors during the past several phases made, and at least you maintain and align your outlook in the way Dhaval just mentioned. So, Dhaval, as we are talking about an outlook, right, there's one important segment that everyone's excited to know about, but everyone is also very fearful about. If you could just throw some light on what are your thoughts on how the mid cap and small cap segment is evolving. So people are really confused between one party saying overvaluation to other saying absolutely no clue on valuation. People are clueless. So, what are your thoughts on mid and small cap?
Sure. So, one of the important learnings that we've had is that never project the future, never crystal gaze, always look at the past and learn from it. And again, for small and mid caps, I will again say that let's learn from the history, that when do small and mid caps do well, right? If I look at the last 20 years history, right, we have seen that there have been three phases where small and mid caps have typically done well. And most of these phases have happened when overall economy is doing well. There is a general good GDP growth rate that has been there, or when we are into an increasing GDP growth rate curve that we're trying to look at. The first phase came from 2004 to 2008, where there was a euphoric rally. Large caps were almost 2.4x in that 4-year kind of a time frame, but small cap and mid cap were 5x and 3x. Why did that happen? Because average GDP growth rate was around 8.5% kind of a CAGR that you're trying to look at, right? Then came the global financial crisis and things went down. From March 2009, we again had a 2-year kind of a revival in the overall economy. We typically saw that again small and mid caps did 1.4x of what large caps did. And then the third phase was again 2013 to 2018, where we were on an increasing GDP growth curve. The overall average GDP growth rate was 7.2%, but still we saw that there was a small and mid cap giving you more than 2x of what large cap gave. From that time frame, in the next few years, we have seen a downturn coming. Now, why did that happen? Because first demon happened, which slowed down the overall growth rate. Then GST happened. Then there was banking cleanup, and finally COVID happened, right? But today, again, we are in a phase where what we are expecting, if you're trying to look ahead, right, because of favorable government policies, because of liquidity scenario which is in and around, that the next 3 to 5 years look fairly exciting from a small and mid cap perspective. And that is where, we think that, from here on, there will again be a big rally that you should be expecting in the broader market. In fact, FY21, which is the last 12 months, agar मैं February ka data dekho, right? because why I'm not taking March is because last year was a big cut, and that is why you're looking at everything giving you 100% return. But look at February data to February, which was pre-COVID levels to this year February. The overall Nifty gave you 20% return, but small and mid cap gave you 32 to 34% return, which was the first year of outperformance after an underperformance from 2018 till 2020 that we're trying to look at. And we think that after this first year, you will still continue to have a broad market rally continuing over the next 3 to 5 years. So we are fairly positive on a broad market rally, on a good small and mid cap rally that we're trying to look at, because we expect the overall economy to do quite well. And that is where is again the context of where we're trying to look at as why we have launched an NFO, which is a multi-cap NFO, where you are predominantly looking at 60-65% small and mid caps, because that is the outlook that we have on an overall market as well as the economy, which can do certainly well from a 3 to 5 year perspective, and broader markets will typically benefit in this context of where we are today.
Right. So I feel for the investors, to whomever the risk profile also suits and the time horizon suits, now could be a good time to start at least nibbling into the mid and small caps. Obviously, be cautious about the kind of funds you select and the kind of stocks you select. It must be either assisted by a professional, or you yourself must have done some comprehensive research on it. But the time is good right now. That's what I'm taking away from Dhaval's elaboration on it. So Dhaval, we are moving towards the close of the session, and we have quite a number of questions that our viewers are asking, but I will be picking three in interest of time. And here's the first question. If my investment horizon is 10 years and we know equities will always outperform, is it still necessary to have debt funds in my portfolio?
Certainly, yes. So, asset allocation it doesn't mean that if you have a very long-term time horizon, you can ignore one asset class that you're trying to look at. Because at the end of 10 years, while you are trying to say that, I want to now encash my investments, you don't know how various asset classes might be, held on at that point in time, depending on the overall economy or depending on the event which is panning out at that point in time. इसीलिए there is a prudentness in keeping and proper asset allocation, where you have investments across various asset classes, so that you reach that end goal much more confidently. Or else imagine that आपने सारा पैसा equity में लगा दिया रहता था, and in September 2008 your 10 years were ending, and at the bottom of the market you would have to encash that. Then how much it would have pained you to do that, right? Similarly is the case that when you're trying to look at every time frame, you should not get caught in a lower end of the market by trying to be only focused on one asset class. You can, if you are an aggressive investor, if you think that I have a disciplined investment approach for 10 years, have a higher allocation towards equity. But debt cannot be ignored. Even for the most aggressive investor, if you're 75% equity, आपको 25% तो debt रखना ही चाहिए in the overall portfolio that you're trying to look at. Is what I would say. It is very useful for emergency purposes. अगर आपको कुछ medical emergencies है, या even otherwise unforeseen situations that you're trying to look at. So that is what is my advice, that always have a healthy asset allocation and not be overtly focused on one asset class.
Right. So the next question is somehow related to the fund that you manage. So here's the question: what are the key changes you have made in your fund, like the hybrid fund, in face of a double whammy wherein the GSEC and equity both are volatile at the same time?
Sure. So one of the important things that we look at is that in a hybrid fund, let equity take the risk and not debt take all the risk that you're trying to look at. And to that extent, what we do on the debt side is try to get a stable return, and let the equity portion take that whatever risk incrementally that you're trying to look at, because 75 to 80% in a hybrid equity fund is exposed towards equity that you're trying to look at. That is where debt adds stability to the overall portfolio, and that is the principle which has helped us, that whenever there is a invariable downturn in the economy, equities might go down because they are future looking asset, but आपके साथ में along with that there is an interest rate cut, and that is where आपका जो debt portion है typically helps in the overall portfolio composition that you're trying to look at. And that is where a hybrid fund, if you look at from a 5, 7, 10, 15, and possibly now it also has a 20-year track record since we launched it in 1995. You've seen that it has lower volatility, and it is giving you almost similar return to what a pure equity product will typically give, is because of the overall rebalancing of the assets that typically happen in a downturn that we're trying to look at, and that is what we continue at all points in time.
Right. And the last question, I'm sure it is something that you'll be passionate about. Here's what it reads: You run among the most comprehensive pharma and healthcare funds. Please share some outlook on the segment.
Sure. So, we launched this fund almost now, 1.5 years back. And when we launched it, we actually called out that, look, pharma has bad 5 years from 2015 till then. And, each of the segments had actually got beaten down for some reason or the other, right? In the last, 18 months, and more specifically in the last 12 months, things have been looking up for the sector. And why has that happened is because of the fact that many people had understood that here is the sector where there is no volatility in earnings, because despite the downturn, people have to consume medicines in every shape and form. And unfortunately in COVID more so, because of the stocking that you would have to do for medicines that you're trying to look at. But our sense is that domestic pharma, which is where there is a robust outlook of around 10 to 11% kind of a CAGR growth, is something that is here to stay. And there are very strong domestic businesses which keep on generating cash, which is higher than their overall PAT on a consistent basis every year. Then there is a revival in the overall export opportunities on the pharmaceutical side, and that is where generic companies on export side are also looking fairly good in that context. But many people only restrict themselves to pharma, and that is where I like this question, which says that you run a comprehensive healthcare portfolio, because there is a bigger component of non-pharma healthcare, which is hospitals, diagnostics that you're trying to look at, specialty companies, which are API-led companies, and there is also wellness companies. We find a lot of opportunities here, in specifically in the hospitals, diagnostics, and wellness as a segment, where we find that many of these companies can grow at 15% CAGR for the next 10 years. And that is where we are fairly excited on the overall opportunity in non-pharma healthcare, much more than what we're trying to look at on the overall pharma side also, where there is higher growth in the overall context. So we think it is a very good thematic for anybody who wants to participate in the overall growth story for pharma and healthcare, should look at one of these products fairly aggressively.
Right. So, Dhaval, this brings us towards the end of our conversation. This has been quite a power-packed conversation. I feel it. We are, in a very short span of time, we covered a wide variety of topics, and you definitely gave us much more than what we had expected, and we had very high expectations already. So, thanks a lot for that. It was a very informative, very insightful session for all of us. I'm sure there's a lot that our viewers are taking back from this conversation. Personally, there's a lot for me as well. So thanks a lot, Dhaval, for your time. It has been a conversation I've truly enjoyed, and I've learned a lot from this conversation.
It was a pleasure to interact with you, Nirav. Thank you. Thank you for having me in.
Thanks, Dhaval.
Yeah.
So, guys, this is Dhaval Shah. He's the fund manager at Aditya Birla Sun Life Mutual Fund, and I'm quickly going to give you a recap or a quick summary of the conversation. The most important takeaways. One, we spoke about how important asset allocation is, and that asset allocation should be a derivative of your risk profile. There could be various schools of thoughts, as it could be a derivative of your age or of various other factors like your income, etc. But at the heart of it, it has to be a derivative of your risk profile and your investment horizon more than anything else. Next, we spoke about diversification. Dhaval shared that diversification is not just about adding more and more funds. It is about understanding the underlying composition of it. You need to ensure you're fairly diversified across sectors. If you keep investing into funds that have a high concentration towards the same set of sectors or the same set of stocks, you are not quite diversifying your portfolio, but in fact topping up your exposure into the same select set of assets that there are. Next, we spoke about how one should not ignore debt while talking about asset allocation. Does not matter how long do you want to invest for. Fundamentally, from a principal standpoint, asset allocation is done for a purpose, and the purpose will be defeated if you ignore debt while creating your asset allocation, irrespective of your time horizon. The next point was you must go for international diversification by investing in global funds, but ensure that you're going true international. You're not just concentrating into a certain geography or into a certain international theme. Invest in a variety of them. That will give you the true benefits of diversification. And finally, we spoke, Dhaval said that now could be a good time to start nibbling into mid and small cap if your risk profile and investment horizon permits so. So this is a brief wrap about everything that we spoke about. Very soon, I'll be back with yet another interesting episode of the Fisdom Wealthcast with a great guest once again. Meanwhile, do not forget to share this video with your near and dear ones. The more you learn, the more you are going to earn, and it's good karma. Just help others learn and earn. You are going to benefit from the same. So hit the like button, share this video, subscribe to the channel so that you're continuously updated about similar such videos that we will be presenting really, really soon. So see you guys around with yet another interesting episode of the Fisdom Wellcast. Meanwhile, have a great weekend and happy investing to all of you.